Hello guys, good morning. Today is Sunday, 20th of December, so we are going to Christmas in a few days. So in this video I will try just to change your way to see the strategy in trading stocks. A lot of people, they send me either comments or private messages or by email. They told me, is this strategy, does this strategy works? And they neglect a lot of things. When you ask this question about strategy, is there a strategy that it is perfect? Perfect, what does it mean? It means you read this strategy, okay, how to select stocks and how to search for them, okay, you find some, you buy them, few days, they go all they go up, you make the money. This is a strategy that works. Do you think that this what will happen in real trading, in real world of trading? This, it will never happen like this. Okay, except when sometimes the market is all up, you get some stocks and they all go up because all the market is going up. This is an exception. It's not a rule. Now the rule is, ask yourself this: do you know the future? You tell me no, I don't know the future. So how do you think someone with strategy, or the strategy itself, either it uses math, or it uses the stars, or it uses or you go to a magician and he gives you a strategy, or you see the gurus online, or you read a book that it is a secret book that has never been published and someone published it and you get the strategy. This is a game of more than 200 centuries, more than 200 years. Understand that. It's just a game that Wall Street has made, and they know that almost all will fail in this game. It's just a few. That's why if you go to Security Exchange Commission and you see how many losers in the market, you find there are a lot. So some years they are 97, sometimes 90, sometimes 85, depending on the year, depending on if it is a bull market, like all the markets going up or going down. It depends on a lot of things. But the losers are the same. It means their perception of the market is wrong. Now, when you look at the market and you are wrong, your trades will be wrong also because of your vision. Because how do you look at the market? A market is a big game. If you are not trade well, if you don't correct your mistakes, if you are stubborn, stubborn, what does it mean? It means like this. I give my opinion about penny stocks. I say, okay, you are beginner, don't trade them because you see that they are cheap, but in real they are not cheap. They are worthless. That's why they are cheap, because these companies are worthless. It means some they have no earnings, some they have little. So when you go and you want to do investing, to do trading, you will see that sometimes you make money, but other times you lose money, and then one day comes and you lose almost all your money. But when you lose almost money, you stop trading, you close your account, and you begin crying and whining, and they say, oh, Wall Street guys, oh, the market is gambling, or the market is it's just because of you. It's just because of your vision to the market. If you change this vision, okay, if you change this vision to the market, you will see that there are other ways, okay, to make the money. Although the market is hard, is difficult, but there are other ways to make the money. Okay, so one of these ways is to use strategy. What does it mean, strategy? Strategy is a full thing. I have explained in another video. It's not just give me one stock today and tomorrow I will see if your strategy works or not. This is, I'm not saying stupid vision, but people, because they don't know what's going on to the market, they have these ideas. They think that someone, they believe it. Because I get some questions like this each time, and I try to explain that it is not a stock that you buy today, tomorrow if it goes up, the strategy works. And if the stock you buy today, tomorrow it goes down, your strategy doesn't work. No, it's not like this. The strategy has rules to follow. Okay? It will never be perfect, 100%. Understand that. No perfectness in strategy. Why? Because you don't know what the other traders, the other side are doing. For example, let's say I and you enter to the same stock. I enter, for example, last week, and I want to sell today. And you think that the stock will go up and you buy today. Now tomorrow the stock, let's say, goes down. I make a profit and you lose your money. It's just you don't know when to enter the stock. Okay? You don't know. And this needs a lot of practice. It's not easy. It's not something that I give you in a video in 1 minute or 2 or 5. I say do this and then tomorrow you will become a professional trader. Professional, it means you should need experience. And experience, you need time. You need to work on these stocks. The more you see of stocks, the more your knowledge becomes bigger and bigger and bigger. For example, you buy a stock and there is a split, or you buy a stock and there is a gap up. It means good news or good earnings. Or you buy a stock and there is a gap down, or you buy a stock and there is bankruptcy and you lose all your money, or a stock that it is getting out of the exchange, getting unlisted from the exchange, or you are buying over the counter, which have no rules. Okay, you are in a market that it is called, in general, it's called the black market. Okay, it means anyone can put the stock down, put it up. They play as they are, as they like, and especially market makers, they make too much money from this penny stocks. Too much money is made by this market maker who are the opposite side of you. You don't see them. Okay, and there are a lot of websites online that they do this penny stocks. Come on to me. You buy the stock, I will give you 1000% profit, and the same as this. Okay, now going back to our subject, there is no what we call a perfect strategy. Why? Because you will never know what the other traders will be doing tomorrow. Okay, I buy today, you buy today, and a lot of buy today because certain criteria that you see in the market, where whatever you use, either you use fundamentals of the company, or you use technical analysis, technical analysis like indicators and moving averages and a lot of stuff, or you don't use them all. You use little like me. I don't use that much of technical analysis. I use only the resistance line and support line to trade, with some rules. Now, everyone have bought with what he thinks is the best strategy for him. Okay, I showed you many things. Okay, so all we buy on the same time. Suppose that we buy on the same time. Now tomorrow, we will never know what will happen. Okay, a hedge fund comes and he shorted the stock tomorrow at 2 o'clock. How do you know? Even if in the morning it goes up a little bit and you think that you are making money, but at 2 o'clock, 3 o'clock he comes and he shorted the stock, and you will see all your money is gone. Okay, so there is no certainty into the market. This you should understand. Okay, the other guys, you for example, if you are having a job and you are participating in the 401k, which is people, they call it a retirement plan. I don't say it is not a retirement plan. It is what we call a saving plan. You should understand the difference. And you are investing at your own risk. What does it mean? It means, suppose that you are working in a company and it has a 401k, and each time you spend some money, $10, $20, $100, depending on your job, and then they match it with either 50% or 100%, and they say you are building wealth for your retirement. So where do they put the money? They put them in the stock market. Stock market is not stable. It's not stable. It can go up too much and you make too much money. But in 10 years, 20 years, 30 years, it comes one day and all what you put can be taken half or 20 or 30%. See what happened in 1987 or 2000 or 2008. Okay? In one day, in a few hours, you can lose 20, 30% of all your money that you spent 20 years, 30 years, 40 years. Okay? And even, this is the funny thing. When you want to, for example, 401k, when you want to take your money, they resist. They don't give you your money until you have hardship, because they need your money. Because when they say, oh, we match your money, and you see your money growing, it's not because the market is growing. Sometimes it's just because you are putting money and it grows. That's it. Now you see that what the company has given you as money in real it's just a fake numbers. Because when you want to go out and you say, okay, after 10 years you have 10,000 or 20,000, you say, okay, let's say you have 20,000. In 10 years you put too much money for a 1k. Now 10,000 is yours, 10,000 is the company that matches. Let's say it matches 100%. You have 20,000. Now, do you know when you want to take this, they resist. They will never give you money. First, they will never give you the whole money. You should wait until 59 and 6 months. It means you reach nearly 60 in order that they give you this money. And then all the money, they tax it as an income, as an ordinary income. Now, if you want to take it before we have hardship or something, from this money, they will tax the money, your money, just your money, 10,000 from out of 20,000. They will tax, let's say 30% or 35%. They take it and then they give you they give you a fee which is 10%. 10% of your money is too much. Okay? And they leave their money and they say, oh, when you are 60, you can take your money. You see how the game is. Because you are putting your money in the stock market, and these people, they need your money. Okay? Because shares, what are shares? Shares are just virtual numbers. They are just virtual. What does mean virtual? Virtual, it means it's not something that you go to a store and you take a brick or two and you say, this is mine, this is my shares of the company. Okay? Just understand this. Now, we go back to our thing, which is a strategy. So, there is no a perfect strategy. Why? Because everyone in the market, no one knows what will happen tomorrow. This is a fact. Now, this is the fact that you should put in your mind. It's a fact. Tomorrow, you will never know. Okay? You will never know. Whatever strategy you use, whatever people tell you, you don't know. When you invest in a company for next year, you will never know what will happen to this company next year. Maybe it loses business, and in 1 year you lose all your money, and maybe it goes bankrupt. Okay? This happened in the market, but even the test of time and the other thing, you see a company that stays 5 years, 10 years, so you say, okay, it's safe. It is safe, just put your money there and let it for 10 years, 20 years, you will have a good profit. Who tells you this? Who can guarantee? This is another problem. Do you know that insurance, the only thing that doesn't guarantee is the stock market? For example, if you go to a bank and they say, I have $10,000, I want to put them in a stock, and they ask, you go to insurance and they say, okay, can you please insure me for this $10,000? Just 10,000. I'm not speaking about hundreds of thousands or your the whole your retirement something. They will never do that. Now, why do you think the insurance, who is a big player in the economy, because they take the money and they do nothing? Okay, this is what the insurance do. When you have a problem, they will put little money. This is done by math. So for me, if you want to understand insurance and stock market, it's nearly the same, although they are two different businesses, but they are the same. It means they take your money. If you don't know how to preserve your money, they will take it. Now, as I told you, if you go to any insurance and you tell them, okay, I have a 401k, I have 20,000 or 50,000, 100,000. Can you insure me? I get an insurance, I pay you each month to insure me that my money doesn't go down, or I don't have a loss each year. They will never do that. You know why? Because they know insurance, they have their own play, but they know the stock market, or what we call Wall Street guys play. They know it. It's 200 to 300 years, and the stock market is always taking money of the people. Some they get rich, some they get poor, but most of the people, they lose money. Except when we have a bull market, when all the market, the mutual funds are buying, and the whole market, any stupid person, anyone who has never traded in his life, has never invested, if there is a bull market, all the market is going up, he buys some stocks, and he can make money, and he can make a percentage, and he is fine. Okay? But when just things change in the market, things change, and the market begin to be a bear market, or all the market going down, everybody who doesn't know how to trade, almost all the people lose their money. Investors are the biggest losers. It means if there is a bad market, they lose too much money. It means that is too much for some stocks. So, in order to retain what I say, is that don't search for a perfect strategy, because it doesn't exist. If someone tells you, I have strategy that when you buy stocks, you will get money for sure, this is a nonsense, because there are other things that you should consider when you do a strategy. Strategy should be strong with the whole criteria of the strategy, the whole thing. For example, money management, risk management, position sizing. It means how many stocks you buy in your account. Any account is different, so position sizing will be different. Risk management and money management. You know what you are doing, and how many shares. Things that you shouldn't do. For example, some people they mix things and they say, let's say for example, they say diversify, buy some bonds, buy some market money, buy this, and by the end of the year, you see that your stocks, maybe they go up and you make money, and you see the other, they go down and you lose money. So you break even and you don't make anything. Okay. So the strategy, it works, but in certain percentage. But this percentage, it changes. So don't follow the percentage of the thing, because I have explained this last video in the winners and the losers in your trades. Okay, I try to give you an idea that it is not the rate, the big rate of winners that makes you the money. You will try it and you will find that it is true. Okay? Because you can make few trades that are good and a lot of trades that are bad, that are losers, but still you can make money. This, you should learn it. No one will give it for free. I will not give you these critical things that makes the money for free, and that's why you go everywhere. Now for me, I give you the idea and explain to you very clearly that the rate of the winners is not what makes money. There is something else that you should do in order to make you the money. Okay? So, and the uncertainty of the market. It means when you buy a stock today, tomorrow you will never know what will happen. So, if you do common sense, I gave this example before, I will give it to you today. And all my students, I will give it to them. I give you an example, and bear with me to explain this. If, for example, in your house, there is a cut of electricity and there is no light, so you call electrician and he comes to your house, and you tell them the problem, that the light has been cut and I don't know what's the problem. I can't fix it. So can you fix that? Okay. He fixed the light and it go on and it's very good. Okay. He has done a good job. So you give him a check and you sign the check, and you don't ask him how much is the job when done. Like $100, $200, depends on the guy. But you ask him this: please take this check, it is signed, put any number that you like, and this is I approve it because I signed the check, take it. Now if I tell you this, you tell me, are you crazy? What? I give him a check, a blank check signed, and they say put any number. He can put $10,000 or $50,000 or wherever. Okay? Wherever money. So, or from 200 he put 1,000. And you ask me a question. You say to me, let me drink something. You say to me, this is a nonsense. This is not a common sense. How someone works in your house for a small job, $100, $200, you give him a blank check and you sign it. Okay? You see, that's nonsense. Now I'll give you an analogy. When you buy stock today and you don't put stop loss, is it the same thing? Yes. Yes, it is the same thing. Although in your mind you say no, but it is yes. You ask the market tomorrow, if you are going down, please, you give him a blank check and you sign. You sign, what does it mean? Because you bought the stock. The stock is in your broker and it is linked to the exchange. And let's say tomorrow a hedge fund or someone who short the stock, and he take, instead of putting stop loss, which this is what you want to give if you are wrong. Like an electrician. You ask him, you should ask him before he did the job, not after he did the job. Electrician, for example, or someone. You say, okay, come see what's the problem. I say, okay, how much you can fix this? He tell, okay, this needs this and this. I need $200. You say, okay, I will give you $200 when the light is on. Okay. Now here, it's the same as when you are in the market. You buy a stock. Okay? And you need to protect yourself to know how much it costs if you are wrong. So let's say it's $200. Let's say it's the same example as an electrician who comes to your home. Okay? So you give the market $200 and you exit the trade and your money is in the broker account. So it is safe because you are not trading anymore. Now, some people, mostly beginners, mostly who don't understand what's going on in the market, they still argue, they still have these bad ideas. Believe me, if you traded 1 year or 2 years or 3 years and you have the same idea that you shouldn't put stop loss, you are doing the same as this guy with the electrician, and you give him blank check. It's blank. You sign it and you give it to him. You say, please take whatever you want for your job. Now, if this guy is his job is $200, he knows that, but he will not give you. Why he should tell you it's $200? Okay, if he is not an honest person, he can put $1,000, $2,000 for his job. Okay, you say this is my job. Okay, I get 1,000 for this kind of job. This is the same analogy to the market. The market, tomorrow you don't know what will happen. Okay, suppose that the market is against you. Now, if you put stop loss, you plan where to exit the trade. You can't. And some people argue always, these beginners. They tell me, oh, and what if the stock go up? I tell them, and I will ask them another question. And what if the stock will never go up again? Okay? What do you do? And this, because they see it doesn't happen that much in the market, they think they are safe. They think that someone is keeping safe their money, and the stock will go just a little bit and then it will go up again. This idea is false. If you continue having this idea, we are right now, today is, let's say, today we are 21st of December, okay? You have a few days to finish the year and then you begin 2015. For me, what I ask you to do is just an opinion. It's just you begin to change your way to look at the market. Look at the market that it is unsafe. The market is unsafe. There are a lot of people, they want to take your money. If you give them the chance, they will take it. And they will never send you a thank you because you give them your money. So what you should do, or what is my opinion about what you should do, is you learn how to protect yourself with risk management, money management, position sizing, how to select stocks, how to put stop loss, how to follow a trend. All these criteria that I use will be helpful for you to decide what to do in the future. So you should know everything, what to do. If the stock goes up, I'm staying. If the stock goes down, I exit to certain where you put your stop loss. Okay? So you plan your trade and you trade the plan. It means you know what you are doing. So a strategy is a way to enter a stock. It means to buy a stock, to put stop loss, to do money management, risk management, and the other stuff. To put stop loss, to follow the trend if there is a trend in this stock. Okay, all this is a strategy. It's a complex and complete things. It's not easy. You need experience, or you need someone who teaches you how to do all these things, and you need to spend money, because when you want to practice, when you want to practice, you need to lose a little money, but it is worth it because you are learning. Okay, it's like when you go to a school, any school in the world, and you want to study something. You want to study, for example, medicine, to be a doctor. You will spend $250,000 or $300,000 as a loan for all your life when you become a doctor, and you begin to make money, and then you begin to pay the loan. Okay, so you need a tuition for your training. Okay, it's not easy. And no one in the market, no one online, no books will tell you a ready-made strategy that you can use and you can make money. Never. Why? Because it makes money. Okay? It makes money. That's why no one will just give you like this for free. And some people they are naive. They think that the market you can trust the market. You send your money there, you buy stocks, and it will be all okay. Okay, so for these reasons I explained extensively in this video. For all these reasons, okay, the thing is, there is no a perfect strategy. This is, you should know from now for every strategy. And the big rate of winners over losers, like 75% or 90%, this will never make you the money, because there are other criteria that in these trades that makes the money or lose the money. You can have a few trades that are good and many trades that are bad, that are losers, but still you can make the money and you will be better than the other one who tells you that I have 95% of winners. Okay? So what does it mean? It means you know the future and you know everything what's going up. Now why you are not a billionaire in 1 year? Because 95% or 75%. Okay? If you know every stock that goes up in the market, so you will be a billionaire in 1 year. This is true. If you know. But I am sure this is a fact. You don't know. And the number that people give is just give for a few minutes. If you buy a stock when the market is going up, like day trading, you can have a lot of winners. But in order to make the money, it's different. In order to make the money is a different story. They can show you that the big rate, they have big rate, okay? But when you analyze their trades, you will understand. You will understand that they are not making any money, and this is a big thing in the market. So it's the end of the year. It's 2014, and we are December 21st. Try to think, because this is the end of the year, and you will begin, if God wills, if you are still alive in 2015, in January, you will begin to trade with another ideas. You try to correct the bad ideas that you have and try to change them. Try to look at the market with a new vision, that the market is in chaos. There is no certainty of anything. When you buy today, the only thing that you protect yourself is stop loss. There is no other thing, because you give them your money, and your money is taken by the exchange. Okay, it's taken by the exchange. Now the guys in the exchange, like floor traders or hedge funds or wherever the guys are, they play their game. If they want to go up and you are going up, you make the money with them. But if they go down and you go up, they take your money. If you don't put stop loss, they take wherever they want. Because if someone is shorting, do you think that he shorted the stock for $1 or $2, and he has the possibility to do $10, $20, $30? I have seen stocks that, for example, the stock is 100. In 1 day, in few hours, it can go to 60, 50, 30. And you understand that you are in a big danger if you don't protect yourself. Okay? It's not because it doesn't happen that often in one stock or 10 stocks that you have done, you say, oh, I am always okay. I buy it, it goes down a little bit, goes up. Okay. And if it doesn't go up again, what will happen to you? All your money is gone. And you see, let's say I give you an example. If you lose 50% of your money, in order to make this 50%, it becomes 100% profit. For example, if you have $10,000, you lose 50%, which is 5,000. Now, in order this 5,000 to become 10,000, what do you need? You need 5,000, which is 100%. You see that? It means when you lose, it's different than when you make the money. It will be harder to make the money. And no one in the market, as I tell always, and the proverb says, there is no free lunch at the market. Understand this. If you are wrong, you exit. If you stay, you will never know what will happen to your investment or to your trading. This I'm telling you. And when you get hurt, like when I was a beginner, and we got hurt and you lose almost all your money, and then maybe you remember me. Oh, you say that guy online in YouTube, he's called Karim. He told me that this and this and this. Oh, it happens. Now it happens when you lose all your money. Okay, don't regret and don't get remorse and don't blame anyone. You blame yourself, because no one will help you. When you lose your money, no one will help you or give you something back, or no one will help you. It's you who should decide. If you don't know how to decide, you should learn how techniques and strategies and how to decide how to carry out your business. Well, this is enough for this video. I repeat always. Someone sent me a private message that he said, you always repeat the same thing in the video twice, thrice, many times. I say, yes, I repeat. I am a teacher and I teach. Now, when I teach, I should remind you of things that I just tell 10 minutes or 5 minutes before. I remind you until this idea goes into your mind. When it goes to your mind, you will profit. You will make money in the future. Why? Because you change the way to look to the market. And all the people who are in the market, who are making more money, they have a different way than the beginners. Okay? The beginners, they trust the stocks. They trust the market. Oh, I bought it here. It goes little bit. It goes up. Okay, who tells you that it goes up? This is ridiculous. This is a nonsense. This is a nonsense. Oh, because they told me that the stock is just a small correction. Who tells you that it is a small correction? What if this small correction becomes a big sell-off? Like what happened in the other years or something. Who tells you? No, you tell me, no one tells me. So, how can you be certain of something that you don't know? Anything in the future, it is uncertain. So, put this in your mind. So, don't tell me that tomorrow the stock will go up or go down. Okay, we don't know. So, for me, how do I work? I don't predict. I just participate in the stock. The stock price is going up today. According to certain criteria, I buy it. Now, when it goes up, I am right. And my probabilities is good. I am right. And I make my money. But if tomorrow the stock is against me and it hits my stop loss, I am out. I have all my money. I lose just a little bit. And I'm out of the market. And I'm looking at the stock. If it goes up again, I will buy it again. No problem. But if it goes down many days and I can lose too much money, like 5%, 10%, 20%, oh no, man, I will never give Wall Street guys my money like this. Okay? I can give my money to charity. Okay? I take my money, I give to charity or to people who are poor, I give. Because those people are in need. But Wall Street guys, they have millions of dollars, billions of dollars in their pockets. And they don't need us. Okay? They need us to make more money for themselves, but not for charity things. Okay? So in order to, if you want to give money, don't give money to Wall Street guys. Give them to a poor person or in the street or homeless or charity organization. At least you have done something good in your life. But if you give your money, you buy stock, you don't put stop loss, they take your money. Okay, those are rich and they are filthy wealthy. They have too much money and they want more. They want because of greed. Okay, okay. They know the game. They know how do you act. They know how, because you are beginner, how you're thinking. That's why they take your money and you give them the permission, what we call a blank check, and you sign it and you give it to them so they take wherever they want. Okay, so thank you very much. And if you have some comments or some ideas or something that either you agree or you disagree, you just comment and we can, because for me I want just to explain things as I see them for the right way. Okay, so if you have ideas or you are doing the opposite thing or you are doing, we can just develop this comments and we speak and we just see where things go. Thank you very much and have a nice day.